Hello, welcome back, guys. It looks like today China is ripping again. The whole Chinese stock market is up quite a lot, and Alibaba is following the trend. It's actually up about 10% right now in Hong Kong, and I will show you exactly what is going on there and kind of take you through what has been happening with Alibaba, what we are looking right now at the markets, and what we are expecting to see out of Alibaba. Now, let's first take a look, take a glance at what is happening right now in Hong Kong, and you will see that Alibaba is trading at 108 Hong Kong dollars here. The way to do the conversion, I have the calculator here. Each Hong Kong dollar is 0.13 US dollars. So what you can do is 108 multiplied by 0.13, it's the currency right now, the conversion, and it is 14.04 Hong Kong dollars. And remember, its Hong Kong share is actually 1/8 of what the ADR is. So eight Hong Kong shares constitute one US ADR, the Baba stock. So you have to multiply by 8 to discover the actual price of Alibaba shares right now in the US. $112.3 is what it is right now. And we are expecting this to match the market when it opens up. And it will probably happen pre-market. So when the pre-market opens in the US, you will see that being reflected in the pre-market hours here. We are likely expecting Alibaba to be trading at about 112 or 111, something of that sort, I'm assuming, when the market opens. Again, unless something weird doesn't happen and we have a reversal, of course. But I kind of wanted to chat a little bit about what has been happening in terms of news and kind of take you through the history. It's easy to forget. And I have been making tons of videos about Alibaba. A lot of people are interested. And since the very, very early days when the stock was going down and down and down, I was already pretty much making videos telling you that the sentiment will eventually change. It was the time to buy, and I think it still is. I think we're still early in the cycle, very early actually. But I was talking about articles like this one, for example, where Hong Kong market sinks after JP Morgan calls sector uninvestable. Do you remember this one? This actually happened about 2 to 3 months ago, 15th of March. And I did make a video back then, again, telling you how this is going to be temporary. And it's basically setting up for what is going to come next. And so things started to change slowly and actually faster than I would expect. Now, frankly, I expect these cycles to happen in taking more time, really. I expected this to happen over a span of like a year or so, maybe. But this seems to be happening earlier. And take a look at this one. Chinese tech companies no longer uninvestable for JP Morgan. So Shanghai has recorded a third day of no COVID-19 cases outside of current quarantine facilities. And at some point, remember, on 14th of March, they called the sector uninvestable, that's JP Morgan, and they downgraded the whole Chinese internet stocks to underweight over here. And so markets kept getting better, and they started to like the Chinese tech companies. So they said that they are no longer uninvestable. So that was 17th of May. And what follows with some other articles, JP Morgan analyst behind an investable call upgrade China tech. Again, it started to make headlines pretty much all over the place. And so let's fast forward to today, June 7th. JP Morgan sees buying opportunities in Alibaba and other Chinese stocks, citing these reasons. So remember, we went from completely uninvestable to we probably made a mistake, it was a typo, we didn't mean uninvestable, to let's upgrade the Chinese sector because they are doing better, to let's all buy China because we have buying opportunities right now. That's how it works, that's how the cycle works. And of course there will be supposed reasons, and there are reasons, but the whole thing behind it is basically a cycle that has to be fulfilled with all these surfacing reasons. There can always be reasons for selling and buying, and they can be pretty much completely irrelevant to what the company is doing financially. Most times they will be. Again, it's all about the market sentiment and how you want to set up for the upcoming play. So this is talking about the deep sell-off, of course, as JP Morgan mentioned that they were doing bad, and then they're all of a sudden on the verge of a turnaround. And recently we had the reports actually from China looking to end its year-long regulatory probe on Didi. Remember, we made a video about this one, allowing them to release basically their applications. And they seem to be looking at, we seem to be looking at some incremental improvements from the ease of in lockdowns, regulations, things of that sort. Nasdaq pretty much, that's the Chinese index actually, Nasdaq Golden Dragon Chinese index, pretty much is soaring on June 6, and now we're starting to see opportunities here. And so the past year's decline created an opportunity for investors. This is what we have been saying for a long time now. While many people remained bearish on Alibaba, we kept saying that this is a fantastic opportunity because of the financials of the company. This is a massive giant here that is completely undervalued and definitely not uninvestable, as JP Morgan actually was saying. But JP Morgan also recently upgraded multiple Chinese internet companies, we just talked about this, including Alibaba, of course, within months, a couple of months really, of calling them uninvestable. So what changed fundamentally? And the answer is nothing changed. The sentiment changed, the cycle begins to change, is what changed. And what I find interesting here is another article from JP Morgan Asset Management, which mentions that Russia is uninvestable and China is not. Again, a little bit of a switch, because they did say a couple of months ago, that is, that China was uninvestable, and now they're talking about Russia. And frankly speaking, and of course I'm not recommending this to anybody, this is your own money and your own decisions, but I myself, I'm looking to invest in Russia when things die down a little bit in terms of what is happening right now. I'm definitely looking to buy some of their big like banks and things of that sort. I will be taking a little bit of a closer look. It's just right now my broker doesn't even allow me to. I don't even know what they are doing, why they are doing that. But I mean, yeah, okay, there are some sanctions and stuff. But I would want to add some Russia in my portfolio, no doubt about it. Especially now that JP Morgan told us that Russia is uninvestable. I'm really crying to get some Russian stocks, frankly. But I wanted to mention this one because I think it's interesting. That's what I kind of wanted to mention in this video, kind of take you through what is happening so that you are aware. I found these articles pretty much amusing, and I fully expected this to be the case. Again, I talked about this one like 2 or 3 months ago. It was crystal clear that it would happen, and I think that things are going to get much better for Alibaba. In between, you are going to be looking at down days, no doubt about it. That's how it works. You can never go up all the way. But overall, I'm pretty sure we're going to be looking at the Chinese market and companies like Alibaba, Tencent, Baidu, potentially, all these great companies really, probably reaping in the next few months or so. That's what I would expect. And again, it may take more time. It may take some downturns, maybe potential downturns within the uptrend. So downtrends within the core uptrend. This happens a lot in the stock market. But overall, I think we're looking at a very clear sentiment switch, and I think it would be a smart idea to accumulate. This is actually why I bought some time ago. I fully expected this, and again, I was pretty much making videos telling about it. So let me know what you think about Alibaba. Fascinating, right? Thanks for watching the video, and remember to leave a comment. I'd love to hear your opinion about this. What is happening right now with Baba Raping? It's up what, like 20? Let's take a look at the 1 week chart. It was 94, and right now it's gonna be 110. So this must be what, like 25% or something. So it's gonna open up at 112 or so, it looks like. Thanks for watching, guys. Remember to leave a like and subscribe, and you can always join us and become a Patreon for the channel and gain access to the tool, this tool that you can use to analyze your stocks. And you can find links in the description box below. We'd also love to have you on our Discord channel. Again, you can find links in the description box below. We're chatting pretty much every day about all sorts of fascinating things. And yeah, we'd love to see you. And thanks for watching. See you soon. Bye-bye.